Right. Hey everyone, it's Josh from Easy Crypto. We're here for another episode of CEO Reacts, where I'm going to fly through some news articles that I haven't seen. My team have prepared these for me first thing this morning, so everything I'm seeing, I'm going to see for the first time, just as you guys do. And the point of this segment is to have a little look at the news articles, discuss my opinions and thoughts of those with you, and try to add in some of my knowledge from where we are in the business and obviously the position that I'm in the sector here in the UK, to maybe give a little bit of extra detail to what is in the article, to give a bit of background information that may or may not be useful into helping understand what the heck is going on in the crazy crypto world at the moment. So without further ado, let's get straight into it and jump into our first article. So what do we have? Okay, so exclusive mining could have negative implications for the blockchain industry, say experts. Always makes me laugh when they claim that experts have said something, because who are they? So let's see. So a new mining concept is facing criticism of the blockchain sphere. Okay. Okay, so here's your expert. Dr. Elias Strenheli of the Blockchain Research Lab in Leonardo University of Hamburg recently warned blockchain nodes engaging executive mining have no incentive for new transactions to their peers. So what is this getting into? They speculated that crypto miners may instead be incentivized to keep transactions confidential in the hope of being the only one who can earn the associated transaction fees. Okay. Exclusive miner, which time includes the transaction sharing a single miner or pool, uses private channels. Okay. So this is all about so as a result, smaller criminals may see smaller blockchain networks as most of the vehicles for money laundering activating. Okay. So really what this is getting at is it's saying that there are some coins out there that you can mine that are quite small, and that you can kind of have deals, as it were, between the pools. And you can have deals between the pools, the places where those coins are mined, and the supposedly larger mining people, to be able to communicate those transactions in a way which doesn't go through the wider ledger system and is done in a closed network basis. So you can mine coins without everyone else knowing about it, which is what's going on here. So this is quite a niche thing. It's certainly something that isn't particularly common. So as a result, criminals may see smaller blockchain networks as a more suitable vehicle for money laundering and tax evasion. So I'm not entirely sure how widespread this is. It's quite a short article here, but I don't necessarily think that this is something to be too concerned about. Ultimately, what's probably happened here is that someone is commenting on something which is very, very niche within the sector. The vast majority of blockchains are of course public. The vast majority of coins, of course, all the pools are open, so you can see what's going on there as well. So I think this might sound a little bit scary and a little bit negative on the surface, but in reality, I'm pretty sure this has come from a single or maybe one or two isolated incidents where this has occurred. And this is the kind of news that's been spun off the back of it. It's not necessarily representative of the bigger coins, you know, the Ethereums, Zcash, the Ravens, the coins that you're going to be familiar with. So sounds scary, but isn't something that concerns us. It's certainly something that, you know, being in the position that I am in the crypto mining space in the UK, we've never come across anything of this nature. So it's probably going to be a few individuals doing something under the hood for malicious intent, which again, you're always going to get in every sector, be that crypto or something else. So sounds scary, but again, the negative implications, ironically, the implications are probably going to be worse with articles like this being published rather than the implications for the price or the market, because I presume this is on such a small scale. But again, it's something to be aware of in the space, and is something that isn't too much of a concern, but interesting that people are writing about that type of stuff. So let's move on to number 2. So number 2 is Bank of England governor wants global regulations as stablecoins pick up steam. Okay, so lots to talk about here. So the governor of the Bank of England has said stablecoins need global regulation, warning private issuers the international regulatory framework could soon be on the cards. So this is from Andrew Bailey. So, you know, there's lots going on here. So I'll take you through the article and share some thoughts. So Andrew Bailey has said that people need a global response, obviously, because crypto is, of course, a global thing. Speaking on Thursday, he said the nature of stablecoins, which can be based in one country and operate in another, mean failure to coordinate could result in confusion and regulatory fragmentation. So this is where he was talking, an audience at the Hutchins Centre, and ultimately he said that, well, this is the quote he said, host regulators of global stablecoins must and are working with other organisations and regulations in other jurisdictions to ensure that they are appropriately regulated, and gaps in the coverage, regulatory arbitrage do not emerge. So this is very curious. Yeah. So I mean, it sounds like it might be coming from a good place. Obviously here, it's all about the regulation, so they say, is to do with making sure people can always get one-to-one parity with the underlying fiat currency. But again, it then goes on to talk about regulatory standards, both at a national and international level. Of course, he described Bitcoin as wholly unsuitable for payments, of course. He said some stablecoin proposals could become the primary means for purchasing goods and services. So, yeah. So this is quite interesting stuff. So again, the Bank of England has previously told you the idea of a digital pound. Even suggested private companies could play a role in the issuance. So yeah, so there's lots and lots and lots and lots of things going on here. So let's have a little flick back to this. So the Bank of England governor ultimately wanting to ensure that stable coins remain stable, which is a good thing. So for those of you watching who aren't familiar with what a stable coin is, the best example of that is a coin called Tether. Don't hate me in the comments if there's some people that are in the space who think Tether isn't the best example of a stable coin, but just to illustrate the purpose. Ultimately, in cryptocurrency, there are many different coins that all have different values. And the point of a stable coin is that it remains stable and is fixed against a certain price mechanism. So Tether, on most other stable coins, are fixed against the value of $1. So one coin is always going to equal $1, as is the theory. So ultimately, let's say you bought in Bitcoin at $10,000 and then it went up to $11,000 the next day, but you didn't want to sell that profit into cash, then back into your bank account. You might want to keep that into crypto because you believe maybe it might be due a retracement and go back to 10,500, so you can use that $11,000 to then buy more Bitcoin, and you want to kind of go in and out and trade and those types of things. This is where stable coins become very, very useful indeed, because you can effectively move in and out of dollars, but within the crypto sphere. You don't need to exit the crypto markets to be able to do that. So very, very popular things. And ultimately what the discussion here is that if they are equivalent one-to-one with a pound, with a dollar, with a euro, with a yen, what we're left with is ultimately the banks and the modern financial systems that exist are getting a little bit nervous about if all these things happen and this digital economy takes off and everyone's paying with digital dollars and digital coins, where does it leave those currencies? So this really is a much, much larger discussion about global economics and banking and governments fighting for control in a digital cryptographic space. And all of this kind of really stems from the arguments that obviously cryptocurrency came around effectively as an alternative system to the modern banking system as we know it today, back in 2009 after the financial crisis. So everything that crypto has done and moved forward is obviously trying to create a secondary system, and ultimately there's this really interesting dialogue going on in the space at the moment, where if we want the user base of the space to grow and more average people to get into the space, then people need to trust the space. And in order for people to trust the space, it's much easier if they use trust that they already have with other parties. So if NatWest or Santander or Bank of America came out with here's your sort code and account number and here's your Bitcoin address, then that would automatically legitimize Bitcoin for many, many, many people, massively increasing adoption. The kind of refuted argument to that is, well, we don't want that because the banks are the banks and we want to do our things separately because we're sick of the way that they're doing things. So this is really kind of like interesting clash at the moment where ultimately we're trying to fudge two systems together at the moment in some type of hybrid format, where ultimately we have on one hand the governor of the Bank of England saying Bitcoin's a ridiculous method of payment. Well, obviously they're going to say that because they have no control over it and no inference of it and no ability to mandate that in any way. What they're trying to do here is have a coin in which they have some level of control over, that they can regulate, that they can of course reap some type of benefit from for themselves directly as well. So intrinsically that's not necessarily a bad thing if it ends up meaning that there could be wider adoption in the space as a whole. But of course it's this kind of very nuanced conversation about, do we want governments to have control over our finances, where does personal responsibility lie? Ultimately comes down to whether or not you're a big crypto fan, a diehard kind of Bitcoin or cryptographer, in the sense that crypto is going to be the only type of currency moving forward, or are we going to have a hybrid system? A lot of this comes down to people's beliefs and theologies about what the right thing to do moving forward is. So these are the type of discussions that we're now getting, which really are coming to light more and more as the space continues to mature. So probably way too much to talk about there than this one video, but that's kind of the background context for this article, which hopefully might give you a little bit more information. So moving on, article number 3, Binance brings out platform for farming new assets. Right, okay, Bella protocol be the first project to participate. So world's largest crypto exchange, Binance, unveiled the Launch Pool platform. The new platform allows users to securely farm new assets, as well as users get new token rewards in return for staking Binance, BUSD, and other tokens. Probably explains Binance's coin's nice little rise over the past few days. The first project in Launch Pool is the Bella protocol, where users will be able to stake their BNB, BUSD, or ARPA tokens into 3 separate pools to farm Bell tokens. Right, okay. In addition, Binance will then list Bell and, open trading for Bell with different pairs. Right, okay, the benefits of the Bell token. Numerous benefits of holding these Bell tokens, such as discounts for the services, staking, voting, governance, and rewards. Right. So they've already had a private token sale, which has been co-founded by some pretty big people. So this is really interesting, and this is all kind of, this whole staking thing and the protocols and earning these coins, it's really all coming from this new DeFi area at the moment, this decentralized finance that we spoke about a little bit in the last video. No doubt the guys can link one of the other previous videos in the links below. But ultimately, as the market matures now, people are okay with holding coins for a longer period of time because they know the market, or they believe the market is certainly going to move in one direction. But people want to earn some type of interest on their coins as they hold them. And all of these types of things are now coming to fruition, where people have the ability to be able to do that as things continue to move forward with these more advanced lending platforms, and platforms have leverage and exchanges. So Binance is now jumping on this bandwagon and offering its spin of the services, and inevitably I'm sure that's going to be quite successful, just due to the sheer scale of Binance. And obviously CZen's running a pretty tight ship there, and lots and lots of people are pretty happy with Binance generally as one of our preferred exchanges. I really think it's a great place to be trading and having your coins. So yeah, that's interesting. So this is just the first to participate in the platform. It's very likely that others are probably going to follow, which is interesting moving forward. So the final kind of article that we've got today is, oh, cool. Okay, so the number of women in crypto and blockchain is skyrocketing in 2020. Perfect. So recent reports show an unprecedented increase in the number of women involved in the crypto space. Some exchanges see 160% surge. Cool. Okay. So it's widely believed that the cryptocurrency blockchain sectors are almost exclusively male dominated. Seems to be the case from a lot of my experiences, unfortunately. However, a report released by CoinMarketCap, according to analysts, the number of women in the cryptocurrency industry has increased by 43% in the first quarter of 2020. Very interesting. Below is a breakdown of the key factors. Okay, so women investing more into Bitcoin. Brilliant. That's definitely going to happen as, of course, Bitcoin becomes more noticeable. More people know about it. That's going to mean more people investing, which is obviously going to mean more women too, I guess. A study published in December from Grayscale. Great big shout to Grayscale. They're doing some really interesting things with asset investments with Bitcoin at the moment. Showed that 43% of investors interested in Bitcoin were women, up from 13% last year, and the numbers actively growing. That is interesting. A global financial conditions tightened, many people began to invest in real estate, gold, and crypto, assuming that females tend to be more pessimistic than males about the global economy. That's a big assumption to make, I guess, but apparently that's what the article says. Females tend to be more pessimistic than males about the global economy. Their confidence in crypto could significantly increase in 2020. As such, many women found a safe haven in digital assets. So that opens up a much wider discussion, really, as of course gold is currently at pretty much all-time high prices at the time of filming this, over $2,000. And of course, you know, as the global economy is now in a very, very bizarre place with Corona and everything that's kind of going on in the world, many people are moving their assets into crypto, into non-geopolitically connected asset classes because of all the confusion and bizarreness in the world. So women can get more income through trading, investing in virtual spending in Bitcoin, and the token economy can democratize access to capital through instant security token offerings. So interestingly, so yeah, many trading platforms see an increase in crypto demand, which is good. So again, surge of deposits, particularly with the $1,200 that each American citizen got as well, which is very bizarre. Many people putting $1,200 into crypto when those stimulus checks landed in America. Kind of a funny thing. At the same time, Bitcoin has doubled in value over the past 2 months. So I mean, you can't really complain there, considering there's been some pretty nice prices. So women have just been as competent as men, in particular according to Grayscale. 49% of women predicted that Bitcoin's limited emission would lead to its price growth in the future. So there you go. Crypto trading isn't a boys' club. The growth of Bitcoin price, as well as the investment, attracts digital money as it increases the number of women in the crypto exchanges. Thus, for example, crypto exchange BitHub reported that the company was a 30% growth in the number of its female users in 2020. So women using digital money to hedge their funds, although not all trade proactively, which is an interesting separation. I think women usually are less reversed when it comes to investing in Bitcoin due to the technical piece of it and the volatility of the token. I think they're just trying to diversify, hedge their portfolio to start looking at Bitcoin as an alternative investment due to losing confidence in additional securities economy as a whole during the pandemic. More women open accounts, but not necessarily trading through. They are exploring. So it seems though even more women are investing into the space. The article seems to suggest at least that there's still a bit more of a nervousness there to the wider sector. So the number of female users has grown between 22 and 160%. Of course, here it doesn't give any numbers as to the differences between that. So it would be interesting. I'd really like to see a number. So if the amount of women has increased from 22 to 160, I'd like to see what that number looks like in terms of growth of the whole platform, and particularly number of men versus number of women on that platform. Because if it's only a 1% of people on that platform are women, it doesn't take as anywhere near as many numbers to get a larger percent increase, going from 1% to 2%, as it would do the 99%, if in theory that's the way the numbers break down. So it'd be quite interesting to see what these numbers look like as actual numbers rather than a percentage. That might help us to assess just kind of where this sits and what progress is being made. So again, it's all user-based segments, which is good. But the raw data would again just be quite interesting to see just how the numbers skew. So yeah, it's quite interesting. So Coin Corner revealed the share of women amongst its users is 14%. So that's, you know, it's looking like that's an interesting thing. Second to this as well, not to throw a spanner in the works, but there have been, as crypto becomes a larger thing, and more people are aware of what it is, how it works, what's going on, there are seemingly plenty of men who are signing up for cryptocurrency accounts in their wives' or partners' names due to possible tax mitigations and liabilities there as well. I saw some articles about that separately. So it would be interesting. I guess we'd never be able to know if someone's using a second account. That's not really what this is about, but it'll be interesting to see if these figures are manipulated by people trying to use this maliciously, or what percentage of that is natural to getting more women in the space. So 162% of growth rate for new female users this year. So that's good for Bitfinex. So ultimately, I guess the headlines of this is that women are getting more interested in the space, which is great. More people in the space, the better. Everyone can come and learn about crypto, and that's kind of the whole thing of it. And again, I guess it says cryptocurrency becomes easy to use because it is quite a geeky thing, crypto. It certainly was a few years ago. As it gets easier and easier, we're kind of finding that there. So interestingly, here the article goes on about the Greek economy and difference in geolocations, onboarding women into the space. So again, Greece, Romania, Portugal, Ukraine, many of these countries where the economic conditions have been harder, there's been more women that have been involved in this space. So again, this adds to the wider suggestion that crypto is being seen as an alternative solution to central problems in those areas. So we see this a lot with countries that have been struggling. So, Greece and Ukraine and places where the economy has kind of had very negative effects from things out of an individual's control. We see a very large push to people using Bitcoin. So places like South Africa, for example, where the markets have been obviously very heavily manipulated with many government restrictions being put on people as to what they can and can't do for their money. We've ended up getting many people using Bitcoin and crypto more regularly over there because it becomes a more effective form of payment for particularly moving money in and out of the country, as there are restrictions there. So this article goes on and basically breaks it down country by country, and seeing whatever. So that actually goes with Indonesia having the biggest progress with an 88.92% increase in number of women interested in digital money. So there you go. And apparently crypto shopping has seen some increases too, so women spending crypto for shopping too, which is good. So it really moves on to quite a lot. It's quite an extensive article, and it also goes on to talk about, we'll flick back here to successful examples of other women in gender equality. In the world of cryptocurrencies, there have never been more women trading, but also entering roles traditionally dominated by men, including analysts, developers, and community leads. So that's quite good. Large crypto companies such as Bancor and Binance are vivid examples of this. The former co-founded by Gala, and both with 40% to 50% being women. Another crypto exchange, Tubi, counting 1,300 employees, announced a lady as the first female executive. So it's getting to that point where, as it becomes more of a thing, wider skill sets are needed, and obviously the gender roles are changing. And I think ultimately it doesn't surprise me that it's been slow for these things to happen. Bitcoin and crypto was obviously founded by bunches of people that were very heavily into the computer world, and stereotypically for 20 years now that's been massively male dominated, and as the roles in which you can participate in this open up, because I don't really think there's been massive gains in the amount of female coders in the last 20 years. There's certainly progress being made, but the numbers do still skew very heavily to men, which would insinuate why there's more people in the crypto space. Certainly when it comes to my business, we have a skew of male clients again, when it comes to crypto, and particularly investments as well. Although that said, the women that we do have as clients are arguably some of our favorite clients actually, because they're doing some pretty incredible things. It seems to be that the ones that we do get are the exceptional ones, which is a really lovely thing. But yeah, ultimately anything we can do to balance things out moving forward is great. More people involved in the space is a really good thing, and ultimately the more people that are comfortable with this, it's going to work really well. And ultimately there's no point in us trying to have global adoption if that only means 50% of the people in the world, because the guys are getting involved in this. It kind of makes no sense. So hopefully it'll be nice if the comments and the sex of the people watching the video would be more split as well. Again, the channel being in crypto does have a more heavily male based audience, but hopefully the information that we're providing, of course, is for everybody, just as people want to get into the space. So anything that we can do there to push that along is definitely a good thing, and I think it will bring some interest in more projects and some different ideas to the table as well. So all in all, I think that's a pretty good article, which is showing some pretty good signs of things moving forward. So that pretty much concludes everything that we've got to go through today. So there were 4 quick articles, hopefully gave you some more interesting understanding of what's maybe going on behind them and a little review of what's what. So no doubt you've enjoyed watching this video. If you could leave a little like down below, which would be fantastic, or over here, over this side. If you could give us a like and maybe a share or a comment. And again, we want to take your feedback on these videos as to how we can improve them. What type of questions and comments would you like us to be able to run through in different video segments moving forward? We're going to be planning the next month of videos now as we move forward, to get all this stuff booked in internally for time management. So if you guys have any questions or queries or things you'd really like us to see, we'd love to be able to see your suggestions coming to light on the channel as we move forward. So we hope you've been able to enjoy this video. We look forward to speaking to you again soon, and we hope you've enjoyed these things, and we'll see you in the next video. Take care.